Okay, I don't know if you can hear me. I believe you can hear me. All right, good day everyone, and welcome to my channel. I'm glad you're here, and I want you to subscribe to this channel to get premium tips on how you can trade smartly and to end your struggles and become a profitable trader. So today is Saturday. I want to do a review of the market for a few pairs. I pray I can complete the whole pair, but this video is worth you watching till the end. And also please subscribe to this channel, as I intend to give you premium quality and also premium signal and education on how to navigate the forex market. So before all this, and let me not waste your time. So I want us to look at Gbpusd, Eurusd, Eurjpy, and also Xauusd, that's gold. So I want to review yesterday's trade. If you watched my previous video, I don't know if I can place the link here. This was my analysis on Gbpusd. I said price will go up and get at least this origin here before price start coming down, and exactly as I said it, and that's how price played up. And also I made the same analysis for I think Eurusd. Yeah, Eurusd. I said price will get to certain level, yeah, and it goes to origin. Also price is playing out, it's rejecting and also playing out as I said. But I don't think I made a video for the Eurusd. I think I made a video for just Gbpusd, and also for Eurjpy, as I predicted also how price will navigate. You can see exactly how price went my direction as I navigated the market. Though yeah, I think it has not hit my target though, but at least it was how I predicted the market. And the same thing for USD card. I don't know if I did this for USD card. I think I was looking at it. I think I had the same bias, and price went as planned and as agreed. So it's important for you to watch this video till the end so you can get a thing or two. So I don't know if my strength can carry me to talk about the whole pair, but I'm going to try my best to make sure I finish the whole pair. I hope the background music is not too loud. I can't listen to it now, but I'll try and see if I can improve on the level. Right now I think I put the background music at 40. Let me take it to 45. I think let's just leave it that way. I pray it's clear enough. All right, that being said, please like and subscribe to this channel. Please like and subscribe to this channel. Help us grow. There's also a Telegram group where I do my mentorship, so you can also click and join my mentorship, where I give out trade setups for you to look at and also place your own trade. Trading is risky, so you need to know how to calculate your trade and put your actual stop loss. All right, that being said, let's get straight to it now. Right, okay, let's start with Gbpusd. So okay, let me clean up all the charts I did before. So normally you start from a daily time frame. And you look for the nearest break of structure. I hope you know it's as simple. When price does this is your break of structure here. Yes, that's your break of structure. You just need to keep it simple. You need to learn how to keep forex very simple. Keep it simple, don't overcomplicate. I'm a day trader and I look for the nearest break of structure. This is a whole lot of data from this point here, from this point all the way here. This is a whole lot of data for me to take a trade for just a day. This is a whole lot of data to work with. I don't need to come far and be checking on the weekly, and no. Just this data here alone is more than a week. It's enough for me to take a trade for that day and I'm out. Then the next day I come again. So that being said, so right now, as you can see, the nearest break of structure I can see here is this place. So what am I anticipating? I'm anticipating that price has broken this structure. So this is my weak high and this is my strong low. So this place, meaning this place is very deep, will now be a strong place for price to break. So I'm expecting price to at least get to this point and take out this high. and give me another break of structure, right? And it continues, and that's how price will keep going and keep going like that. Sorry about that. Okay, right now, so like I said, this is the nearest break of structure. This point here is your nearest break of structure, on the daily time frame. So what is the origin of what is the low that gave out to this break of structure? I will say this is my origin. This is where price started moving from, that broke this high. Price started moving from here, then to this place that broke this high. So price came from here. All right. So right now, I'm going to move to lower time frame because so you can see that it was at this point that price came here. You're right. So when price came here, there's a push up. Right? So the push up reacted to this origin here. So because there's no break of structure here, because price didn't break any structure here, so this is not an origin. This is more of like a supply zone. You just know this. Just know it. It doesn't matter. Just know it. So it's more like a, because if it had broken this low, then this would have been a proper origin, because price has broken this low. But because price did not break this low, so this is just a supply zone. So now I'll be doing my analysis from the reaction from this point, from here to this, from here to this point. This is what I'll be looking at for my reaction. My reaction. So what happened? You discover that price also came down. Then price what they call liquidated this low. That's what it means. Yes. Price liquidated this low, and price couldn't close below this low. You can see that price came here and there was a push up. So probably this candle might not be seen this candle, but price is here to liquidate this low. So price at this point, let me say price at this point, let me say this is now a demand zone, because price this push couldn't break this high. I think this high, so it couldn't break this high, so it's now a demand zone. I don't know if you understand. So now this push up is supposed to push this price up, but it couldn't break it, so this is now more like a demand zone. So price came back to demand zone, and let's see if this demand zone is going to hold price and be able to push price back up to finally take out this high. So that's what we look out for right now. So now price is here, so we are looking at the reaction at this point, whether there will be a reversal or there will be a break. So what is your expectation at this demand zone? You're expecting price to go down. If it goes down, then wait for you to retest and you can continue your sell. But price can equally come here and reject up. So this place is a place of, you have to watch carefully and see what price will do here. So you can now move to your 4 hours time frame to break the chart more down. So as you can see, price at your demand zone on the 4 hours time frame. You can see that the nearest break of structure from here, price broke structure to the downside. Also, price broke structure to the downside here. So right now, what do you expect right now? So right now, what you see here is you're waiting for, yes, price may likely continue on its way on its journey down, because it's still breaking structure to the downside. So what is the origin of that broke this low here? This is the origin. Just take it. This is the origin that broke, that you are expecting price to, like for price came this way. You're not expecting price to react at this origin and finally take out this low. So that's my view expectation, because price is still breaking down to the downside. Because if you look at this 4 hours trend, it's a strong bearish trend. If you look at this 4 hours trend from this way to this point, it's a strong bearish trend. You understand? It's a strong bearish trend. So right now, so that will be your expectation for now, and for that what price is giving you. So you don't know if you are ready to know if this demand zone is going to hold. You don't know yet. So from your, as you're breaking down to your lower time frames, you get your confirmations if it will hold or not, or else it will continue its journey down. So because this trend is very strong, this is the immediate trend you're looking at. Forget what you've seen in the past. This is the you're looking at. So the trend is highly. So it means there are plenty sellers in the market. So you now move to your 1 hour time frame just to get your. Now you can see from this point to this point here, you can see that it's breaking to the low side. You can see at this point here, price respected this origin and it pushed to the downside. Now you can adjust your origin to this point, your origin. Then also you can see that price broke structure here, broke to the downside. So you can see it is flowing down. It's a flow downwards. So what are your expectations? You can counter trade, or you can wait for the trade. Either you can counter trade, look for your what do you call it, your point of interest. Your origin, this is your imbalance here. This one imbalance. This your imbalance, or you call it fair value gap. Also another imbalance here. You can call it fair value gap. Also, you know, here is also a fair value gap. One reason why counter trading is risky, at all these points can push the market downward, all these points. But you know, it's also, you can risk to trade. You can't just allow the market to move all the way to this point and before you can now call the market off. So you can also counter trade, but just don't play your stop loss, because market can reverse at any time. Understand? So all these point that market may likely want to reverse. So don't. So but since if you don't counter trade, that means you will stay the whole of Friday without taking any trade, and probably it will be around 7 in the evening before you can now take a trade, which is I don't think is nice for a day trader. You know, so a day trader so now you can counter trade and just counter trade and look for a sell here. Then when price gets, I don't look for a short risk to reward. Maybe 1:3, 1:2, and don't get out of the market, because it's risky to counter trade actually. So now in your 1 hour, you've seen that the market is actually bearish. Right now is a reversal. So as you can see, if you come to your 15 minutes to do your further analysis, you can see at this point the market broke, changed character here. Can you see that the market has changed character? So at this point now you can just wait for your it broke. At this point you can enter from this other block here, that is this origin here. You can take your trade from this point here and put your stop loss here. Target 1:3 or 1:2. 1:3 is enough because you're counter trading. Don't over risk your trade. You can see, so you can see the market went away, but your target is, this is where you're supposed to look for entry at this point here. And you can see, if you watch my previous video, exactly as I predicted it, that's how the market went. So this was how I took my trade for Gbpusd. So the next pair will be what will be the next pair? The next pair will now be let me say Eurjpy. Yes, I took Gbpusd also. Yeah, I forgot to say I took Gbpusd also. You can see that it's still there. You can see it's still there. You know, so I think let me just analyze Gbpusd. So I took Gbpusd yesterday also. I don't know if I put it in my mention here. Alright, because we are getting better, you know. I'm already getting exhausted, tired. Goodness me. But I assure you, I'm telling you what you need to know. Just like this channel, because, and share to your friends to just like this channel, because this channel is going to really change the concept of your trading. Yes, it's going to change the concept of your trading. So let's look at Eurojpy. Eurojpy didn't move much. Eurojpy. So let's look at Eurojpy. You can see my analysis tool is there. So I started from the daily time frame. Eurojpy was very choppy, you know, it was a very choppy trade. So I started from the nearest break of structure. As you can see, this is the nearest break of structure here. Your nearest break of structure. Just what you look for. But then you can see this is the origin of the whole move, right? This is the origin of the whole move, as you can see. Also, so what I'm expecting, hoping that this origin here. So this is now a supply zone. A supply zone, right? So what are you expecting about a supply zone? Normally, you are expecting price to, you know, continue take out this high, so you can now have another break of structure from this point, right? Break of structure from this point. So now, but there's a demand zone there, there's a supply zone there, so you have to respect the market and respect the order flow. So at this point, price at this origin, price came and it reacted to the upside. So price got to this zone. So what are your expectations? So what are you looking at? So you have to start from here, because here is telling that the market is bullish. So you now go to your 4 hours time frame and look at what the market is telling you. So the market is telling you that at this point the market was breaking structure to the upside, to the buy side, you know, and at this point too, the market broke structure. So what are you are expecting from price to just be going up? You understand? Until you say otherwise. So what is 4 hours telling you? 4 hours telling you that the market is on the bullish move. Normally, you need to know one thing about forex. Now listen carefully. Market will only come and react to either an order block, origin, or fair value gap to push it upward. What will now make a market reverse is this buy side liquidity. This is the only thing or previous side that can push market down, right? So when market is already on its way up, we expect this one to react from this point, right? Okay, please, it's just something you need to understand, get clearly. All right, so what are your expectations now? So market is still pulling up to go and take out this high. I call it gracious, you know, to come and take out this high. So right now the market is pulling up. So on the 4 hours, you can discover that there's a big fair value gap here, or imbalance. You can call it, you know what you feel like calling it, imbalance or fair value gap, and the origin is very way behind. Sometimes market want to come and test. So anything you see, you have to react from it. Other than an imbalance or the origin, you have to learn to react from every of these point of interest. Yes, you have to learn to react from each of them. So right now, so you've done your 4 hours, so there's no other structure for you to calculate. You can see market has shifted to the imbalance. So you come to your 1 hour and look at what the market is telling you on the 1 hour time frame. You can see that at this point here, the market is breaking structure to the upside on the 1 hour time frame. So what can you see here? There is a demand zone here, because the price, there's no imbalance, so this is a demand zone. So this is where you try to take your entries from. No, there's a fair value gap here, but I think they use this demand zone. It's demand zone here. So you expect price to come. When price comes here, you now come to your 15-minute to seek for your entry. You can see from this point to this point here, there's a demand zone here, right? So you can see now you can see price, as when price got to this demand zone, it started becoming choppy. So when you see you know, when you see you just look for your entry at this point. You get, you know, at this point here, when you see your, or you can go to the 5 minutes to get a clearer place to enter the market, you know. So you can see that at this point price is still breaking down to the downside. Price broke structure here, then also broke structure here. Then you can see is there a broken structure here? Yes, price broke structure here too to the downside. You can see broke structure. So let's see, it was at this point here. Let me say it was at this point here you might want to enter the market. Yes, so you can just wait for when you see the market price has broke, taking out this high. You can try to look for this other block here and put your entry, and also take your target to 1:3 or whatever. But you can see the market is still choppy, it's not moving, there's no momentum. So but at least, you know, it was not a good trade. So that's just it. That's how to keep market simple as you can. So I hope you enjoyed the video. You know, I'm already getting kind of tired. I'm supposed to look at Eurusd, Gbpusd, and AUD/USD, but let's call it a day for now. And maybe later in the day I'll look at Eurusd and XAU. Or let me just see if I can rush up for gold. For gold market, for gold. So let's see what happened with gold. So for gold, normally what you do is you can see my nice for gold went as planned. So let's clear everything up and then start from the beginning. Now gold is a very wonderful pair, so we have to look at it critically. Now look at gold. The nearest break of structure you can see here, this one break of structure, then this another break of structure. So it's very clear that gold is becoming bearish. Yes, gold is now becoming bearish because it has now pulled to the downside. You know, so the origin for this move will be this rejection block here. That's the origin for this move. So what are you looking at now? What other thing are you, because price has reacted from this origin? That means this move is your new trend. The move from here to here is now your new trend, right? So what do? You now move to the 4 hours time frame to see how the market is reacting on the new trend. You can see from the 4 hours time frame, market broke structure to the downside, also broke structure. Also from here, market broke structure, and this is the last structure the market broke to the downside that you have seen. So what is the origin of this move? The origin here will be this. You can see the market is already at that. Okay, let me say this is Friday. That is what anticipation. So you now move to the 1 hour time frame to see what the market is also doing. So this is your last break of structure. You know, you can properly, you know, want to adjust your this is the move. So what is the market doing here? So there's no other break of structure that is visible to you because this one, you know, is a liquidation. So what do you see here? There's a fair value gap here, or imbalance, whatever you want to call it. Fair value gap or imbalance is the same thing. So right now you have seen that the market is actually at the imbalance here on a Friday. And this is from here. So you move to the 15 minutes to properly filter off your other point of interest. So like I said, don't go against the trend. Don't trade against the trend. You can see this one imbalance here. The market has already got into. Sometimes it could be a what? An inducement. That's why market you have to be very careful. So you can see now that the market has reacted to this imbalance, but an inducement. It came and might have taken you out, and you can see this is where the move started from. So So how do you enter this trade? So you are looking at how to enter the trade from the nearest inducement, right? So at this point, from 15 minutes, you can see the market is pulling up to the upside, pulling up to the upside until it got to this point and started pulling downwards. Then the entry. How would you have entered this market? You know, you can't do without stop loss. You can't do without losses in the market. So let's say you took a trade. Now this is not a good sign. Right? This is not a good sign. I need a candle to engulf. This is a full bullish candle that I would not want to trade. It might be an inducement, because imagine how would you have taken this trade if you have entered from this point. This candle is a very big bullish candle, so you know the momentum is still very high. So you might not want to take this because it might likely be an inducement, right? But if this candle has closed below here, yes, I might likely want to consider this trade. But the candle didn't close below this point, so I might not want to consider this trade. I might see it as an inducement. Then I'll wait for the next point of interest. You know, price already within zone. This place is also a rejection block. It's always common in the market. You can see how price reacted swiftly at it. You can check if I mean that it's covered as also an inducement. You know, you can see. Alright, you can see. So now you can see, and this is what I want to see. I want to see at least the first candle, or like in this case, look at this candle, it's a bullish candle, and a candle with strength. Yeah, this is what I want to see. Either I want to see this, then I'll consider taking a trade, my entry from the fair value gap. Put my stop loss here. Then you can see here, what I've gotten at least 1:2 trade before the market closed. You know, so that's how I've traded the gold. So I hope you enjoyed the video. Please like and subscribe, and also share for other forex traders to learn anything or two. I've not talked about entry patterns, but later, or maybe in the next video I upload, I will talk about entry patterns and how you can navigate the market. Do have a wonderful day. Thank you for watching. Bye.